Okay, all right. So how many people do we have? Going to be getting some people coming in as we go on. So feel free to unmute yourself. Feel free to ask questions. I'm going to ask Jackie to monitor the chat because I might not do that very well. And then that way we can I can answer any questions as we go. There is a link that I think Jackie shared in the chat to a couple of things that I want you guys to keep for reference. This right here, Outfront, how many people get the Outfront magazine or have a subscription? You should be able to get it through KW. But here is a very good link to different deductions that you are able to claim on your taxes. Commissions paid out. This is also any credits that you give to your buyers and sellers. That is what this is as well. So please keep in mind when we talk about when you guys are all, giving concessions and things like that, when you give it off of the top, you don't get to claim it. You don't get to use that as a deduction. And a lot of times the percentage that the differences in the percentages, it's not that big of a deal to where if you took it and did it as a credit from your own instead of off of the top, you get it to use a higher amount on your taxes. So if you give it off the top, you don't get to claim it. You don't get to use it because it's taken off the top of it. But because of the split between the market centers, the percentage works out to be a very small amount that you're actually saving, but you get a bigger benefit if you were to claim it as a deduction, part of the commissions that you've paid out. Any questions in regards to that?
Why is more benefits?
Because you get to claim it. So say you do a reduction off of the top of $1,500 in a concession. This is just an example. The percentage that you get to, it's split between us and you, correct, right? When you do a concession, because we deduct it off of the top. If you deduct that $1,500 directly from your own, so it reduces, the one thing I failed to do, guys, was give you an example. On the math, it may be like a couple of $100 difference that you're actually going to be taking home on your check because of the split between us and you. But you get such a bigger benefit of being able to claim that on your taxes if you take it from the bottom and not off the top. What I'll do is I'm sorry, I was going to do this, but anyways, I wasn't able to give you an example. I will do that and I will email it out to everybody who's on the call so that you can see what I'm talking about. If you take $1,500 and you divide it by 30, like a normal split of 70-30, and then, or if you just take the full 1,500 off of your taxes, it's really not that big of a difference. So I'll send an example out. Again, I apologize. I was going to do that prior to this call, but I just didn't do it. Any questions before we move on to anything to the next?
I'm so sorry to interrupt. This is super important.
Sure.
But are you saying like a credit through escrow for like closing costs as an example?
Yes.
I'm sorry. Okay, versus just paying them.
So a lot of agents, there's two ways you can do a credit to the buyer. You can do it off of the top, which is considered a concession. And at that point, it reduces, say your commission earned is $10,000. It reduces the commission earned to $8,500. And at that point, the split between the office and you, it's different. But if you left it at the $10,000 and took it as a credit at the bottom off of your side, you get to claim that as a $1,500 business expense. So the dollar amount that you're actually paying out, it might be reduce the commission that you take home on your check, but you don't get to claim that credit on your taxes.
Awesome. So this requires like the broker letter signed and documentation from escrow in order to show this?
Yes. And so the commission demands that I send you, you just keep that, and it shows on page 2 of the commission demands that it was deducted from your commission. And I'll show you where we can put that in the spreadsheet as we go through each individual tab.
Okay, so really important that we save your commission demand always.
Oh yes, definitely, because it's basically like your pay stub. So it's good to keep that because a lot of times the accountant will ask for proof of how much money you've actually earned. And so it is definitely good to keep a file with all of your commission demands.
If it's already capped, it's going to be off the top anyway, right?
I'm sorry, one more time.
If it's already a capper, it will be come off the top anyway, right?
No. When you do a capper, when you're a capper, I actually adjust it to where it's off of the bottom due to the fact that you will be able, there's no difference. The reason why people take it off of the top is because they don't want to pay out. They want the office to take the hit too, because then you get a little bit more on your side that way. But it's hard when I don't have anything to explain it. Let me see if I can find let me go over here to this and see if I can get and maybe we can walk through it real fast.
So we get more off the top, but yet we still don't get to claim it. So it kind of, it doesn't really work that way, or it doesn't
exactly.
Okay.
So let's say you have a commission of $10,000 and you want to give a credit to your buyer for $1,500. That leaves you with $8,500 to be split, right? So the office will take 30%. And then you receive the rest. Okay, so that's
30% of the 85 or the 10,000?
It's being figured on the 85. But in this example, you do not get to claim that $1,500 tax credit. If we do it this way.
Leslie, so
Yes.
we're not bothering you when we get our commission demand. Is there maybe like a reference where we can just say it and see it and say, okay, great, this was taken off the bottom, put it in the file. That way we're not constantly saying, Leslie, can you double check? Is this taken off the bottom? Is this right?
There is a way to do it when you're when you are entering it into command. The off the top is called a concession, and so that is figured in the demand. If you do it as a deduction, it comes off of the bottom. And that way it will go in where you put your TC fees and stuff like that. And that's how it would be figured. So do you guys see the difference here? So this is how much difference you'll receive in commission. Basically $1,000 and $1,050 is how much you will receive in commission in this example. But the difference is you wouldn't be able to claim that $1,500 deduction. So do you guys see how it's beneficial to do it the other way than it is to take it off of the top?
How much did the office receive?
I'm sorry?
How much more did the office receive?
The office received $450 more.
So we lost $450 out of our commission.
But you only got, so in this example, the office received $2,550 and you received $5,950. In this example, the office received $3,000 and you received $7,000. So there's a difference of $1,050 that you received cash in your hand, but you do not get to claim the $1,500 credit on your taxes. So in actuality, a $1,500 credit will reduce your money your business expenses, because you're going to receive tax on that period. Boom, done. At the end of the year, and you don't have any what's the words I'm looking for? You don't have any
Tax
expense.
deduction.
Yeah, tax deductions. Here, you have to pay the full tax on that. This is actually a credit which goes towards the rest of your expenses, so it reduces your taxes.
Awesome.
Does
I
that
love
make
it,
sense?
Natalie, but I'm also a visual person. Maybe at another time we can actually see the breakdown, but I think it's brilliant.
So this right here is this, it's the same thing. It's a 30% split. And this is a 70% split. And this is the same thing.
Okay, great.
The tax we're going to be billed for 1099 will be the gross commission total before the split, or will be the net commission,
Oh,
everything?
it is the net commission, the net commission. So you do not, the 1099 that you'll receive will be based on how much commission you have received, not what the split to our office.
I just don't understand why we're able to claim the post deduction if it's not the money we receive.
What do you mean?
Because the net is already after the concession, right? So I don't know why they were able to claim a concession as a cost, even after fact is already before we receive the net commission. It's already deducted from the gross.
So in this example here, you are not able, if it comes off at the top, you are not able to claim that on your taxes. In this example, you are able to claim that 1,500. And the tax then would be based on this minus this when you deal with your accountant. And that actually is what, how much? 500. So then your income, so here you're taxed on 5,950, and in this example, you're only taxed on 5,500. I know real accounting is my thing. That's the reason why I'm the MCA. That's why I'm trying to help you guys. If it sounds like wah, 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 I completely understand. If it's hard to let it sink in. I'm just trying to help you guys understand the tax benefits of doing the concessions out of the bottom of your money. I know that a lot of you you want more on your paycheck that you receive than having to worry about it at tax time. But a lot of agents also then are stuck paying a huge tax bill at the end of the year because you're not thinking ahead. Does that make sense?
Yes, absolutely.
Okay, so we're going to go through more deductions that you can claim. I know that a lot of you are not working inside the office, so you're not paying an office fee. You're paying for business fees, and that is tax deductible. If you're working out of your home, you are able to claim the office space, square footage of your office that's in your home. So say your mortgage or your rent or your mortgage payment is $2,500 and you're using 10 by 10, which is what 10 by 10 is
200 square feet.
200 square feet. You use the math to figure out the square footage of your home. If it's 1,100 square foot home, you divide that by your mortgage by that square footage, and then you multiply it by the 200, and that's the deduction that you can claim for your office space. Does that make sense?
Yes.
Okay. Your desk fees for the office, that is something that you can also pay. I mean, you also deduct. So Anything that you pay, which is the monthly fee, if you're paying, whatever I invoice you for every month, that's what you can deduct. If you pay a desk fee in the office, you will not be able to also deduct for the office space in your home. You can't have both. It's one or the other. So I would figure whatever's the more expensive and use that. Education and training. Anything that you pay, family reunion, mega camp, any other books or anything that you buy, all of your, you know, what's the word I'm looking for? Why am I drawing a blank? Your education fees for getting your renewing your license. Anything that you have to pay, that is education and training, and that can be deducted. Your marketing and your advertising expenses, staging, photography, any signs that you use that you put your name on, all of that stuff can be deducted. Your auto, mileage, if you drive 10,000 miles or more, your tax benefit will be the standard mileage deduction, which is however many miles per there's a cost per mile. And I think that right now the IRS is 57 cents a mile you get to deduct. So if you're a lower mileage driver, then you might want to do the actual cost, which would be your gas, your you can do even claim some maintenance, but you have to prove that the maintenance, you would have to basically how many miles you drive versus what is actually on the vehicle. It's a lot more intense in figuring that out. So I would just keep track of the miles. There are apps out there that you can use for your real estate business to where you put in and it'll keep the track of the mileage for you. I'm not exactly sure what they're called, but I do know that there are some out there. Is there any questions in regards to that?
We have to keep receipts and track it very diligently for the IRS.
If you are doing it for the actual costs, yes, you will need to keep all of your receipts. If you figure the mileage, the standard mileage costs, you only have to keep track of your miles. Does that make sense? So there's two different ways you can do it. If you drive over 10,000 miles a year for your business, keeping track and just doing the standard mileage is what that said, which is 57 cents a mile. If you drive less than 10,000 miles, then you can keep your receipts for what you actually spend. But at that point, you're only able to deduct a percentage of tire replacement, oil and stuff, oil changes, depreciation on your vehicle. You can actually even claim that, but you'll only be able to claim a percentage of that at that point.
Can it be multiple cars or just one designated car?
One designated car. If you're using multiple cars, I would suggest you stop. It's easier to track if you just do with one vehicle. That way, if you use one vehicle solely for your real estate business, that way it makes it easier to be able to, the lease payment, you can deduct a portion of it. You can deduct a portion of all of the maintenance that you do on it if that one vehicle is used solely for your business. If you do use it for, leisure and things like that, you would just need to make sure you keep diligent records of how many miles you're actually driving versus for the business. That way you can take the percentage. Like say you put on 20,000, you put 20,000 miles on your vehicle and you spent 10 of it driving, you can claim half of the expenses for that vehicle.
Awesome. Thank you, Leslie.
You're welcome. Office supplies and equipment. If you're, for your home office, you're buying paper, pens, calculators, if you buy a laptop, anything that you spend your money on for your business, you definitely can deduct. There is also, and I'm going to show you in the spreadsheet, a place to keep your depreciation. Office furniture, office equipment, you can depreciate. The basic depreciation schedule is you just take the cost of it, divide it by 5 years, and that's how much you can claim every year. Meals, you can only deduct half of your total expense, including tips and taxes. And that changed a couple of years ago. I'm not sure if you guys were aware of that. But you can only deduct 50% of your expenses for the meals.
Just for all meals or just a meal with client?
That is for meals with your clients. If you're traveling for your business, like say you go to the valley and you go get some food, then you can actually, use that as traveling meals because you're going outside of your normal area. So keep those receipts. You can do that.
Go back to the car. I heard that you can deduct the car purchase or partial if it's like a commercial vehicle or 6,000 pounds kind of stuff. Have you heard about that?
That's getting a little bit more into it. So I forgot to do the disclaimer. I am not a CPA. What I'm giving you is advice for your own to kind of help you out into holding and figuring your own stuff. But I am not a certified public accountant. So please work with your CPA. This is giving you a heads up on things to keep track of. In regards to the commercial vehicle, I have heard something about that, but that's a little bit more above my pay grade. Of course, I'm pretty sure you guys know any fees, licensing, memberships, and your insurance, your car insurance that you keep. We pay it from the office. We pay for your E&O insurance. We pay for the liability insurance, stuff like that. We even keep a workers' comp for you guys. But one of the things you need to do is your vehicle insurance and any other insurances you hold. You can claim that. And that is fully deductible. Any software that you buy and pay for, like say you download an app and you pay a monthly fee for that app or QuickBooks or anything like that, you can claim those. Now the gifts that you give out to your clients, you can only claim $25. If you give a gift that's worth $50, you can only claim $25. I'm not sure, were you guys aware of that?
Hey, Leslie,
Yes.
on insurance, should we carry more insurance than just the office D&O, especially if we're doing high-end deals?
No, because we're responsible for you. That's the reason why we're so hard on you turning in your paperwork correctly so that Mark can review it before you receive your commission. Your files are supposed to be reviewed. So if there's anything that we need fixed in order to be compliant, that's part of the reason why we do that. If there's ever an issue where there's negotiations and things like that, and we had, like, say we settle, you are responsible for your split portion of any costs that we split. I believe that our deductible is $10,000. So if you're on a 30-70 split or 70-30, you are responsible for $7,000 of that cost. Please be aware of that. So if there's ever any issues with the transaction, you have to let Mark know ASAP so that he can begin to get involved in any of the negotiations or try to resolve the situation before it ever becomes monetary. Yes.
If you choose the auto to be like average, like 50 cents, 51 cents, can you still claim the auto insurance? I saw that cover all.
On the auto,
Sorry.
sorry. I'm trying to see who that was. I can't.
This is Grace. Okay.
Okay, hi Grace.
If you
Um,
tender auto, you already can you still do the auto insurance?
yes, the auto insurance is separate because one of the things that we ask is that you hold $1 million policy. That's part of the agreement that you made with the office. So anything above your normal auto insurance, you can deduct as a business expense because we've asked you to include that.
If I have a separate $1 million insurance,
Uh-huh.
Umbrella insurance, would that for the liability of anything I do related with the auto, would that be deductible?
Yes.
Oh, good. That works the tire.
All right, let's see where we were. If you give a gift that has your name branded on it, that is not considered a gift, that is considered marketing materials. So if you're handing that stuff out, please be sure that whatever you pay for it, you're deducting that, but that's not considered a gift when you hand it out.
And that would be the full amount, Leslie?
Of what you pay for it, yes. Yes, so Franco was giving out bottles of wine with his branding on these bottles of wine. He is able to claim the entire amount of that because it's considered a marketing expense.
Cutco knives.
Yes, and the knives that we saw during the presentation, you can do that. I think it was Mega Camp or something that we saw those knives.
Is there a cap for marketing expense?
No, there is no cap for marketing expenses. Here is right here. And that includes staging. If you're the listing agent and you're paying for the staging, you get to claim that as an expense.
Leslie, I have a question.
Uh-huh.
If you're doing, say, like a gift card raffle giveaway, and the person who receives that gift card will say it's over 25, and you put your business cards along in the card with it for the winner, is that marketing or is that a gift?
So what was the reason why you did the raffle?
Well, yeah, okay, for more marketing. Okay.
You're doing these raffles for marketing. So anything that you're purchasing to go with the marketing, you need to keep track of all of that. It's not considered a gift because they're doing something for you in return, correct?
Okay, yeah.
A gift is nothing. A gift is when, like for Christmas, you drop it off on their doorstep. That's a gift.
Okay.
You mailed something to them. That's a gift. Anything that's that you are doing where they're giving you something in return, that you're looking for something in return, whether it's referrals or whether it's for to basically get their business, that's considered marketing and advertising. Okay. See, there's stuff in the chat. Am I answering everybody's questions? I'm looking. All right, let's move on. So I'm just going to give you guys this link here. I believe that Jackie put it in the chat for you. So please save the link for this here for Outfront Magazine. It's very good information, but also save the link for the IRS. This publication right here gives you way more detailed information. And I know who just reading IRS publications is so exciting. But that link is there for you as well. If you are doing your own taxes, please do the research for yourself. If you are using a CPA, please, work with them the best you can. this spreadsheet that I am going to be providing and showing you how to use will keep all of the information in one place for you. Giving this information to your accountant will help them tremendously. It also gives you a snapshot of what where you are financially in your business. It helps you to see whether or not you're truly making money or if you're giving everything away. It's definitely going to help you visualize in a better way what you're doing for your business. So let's go ahead and move on to this. Let's see here. Is there any questions before I move on? And yes, Alice, TC fee is deductible. I will show you where you put that in the spreadsheet. Now, I tried to get rid of this over here because you click on it, it doesn't really go anywhere. So I'm not sure what it's for. I think that the original one, maybe it took you to each tab, but down here on the bottom, yes?
I have questions.
Uh-huh.
So can you clarify if I buy a gift for my client, let's say it's $500 worth of gift for, let's say, do I only could claim $25 out of 500?
Yes,
Okay, got it. Thank you.
depending upon what type of gift. If you are home warranty, if you pay for a home warranty out of your commission, that is not a $25 deductible gift. That is part of your commission. It's a concession in a way, kind of like a credit to the client. Does that make sense?
So I could get the full value of it?
Yes.
Okay, got it. Thank you.
That's part of your cost of doing business. You say that this is what I do for my clients. I pay for the home warranties. Okay.
Mhm.
Hello,
Okay. Yes.
I have a question about the gifts. Let's say you're gonna give a picture to somebody,
Mhm.
like Thomas Kincaid,
Yes.
that you bought a year ago, and you wanted to give it to the client. Can you tell me by going to go get it, plated on the back, to say it's from so and so from so and so, thank you for, purchasing this home. We can deduct it, but what do we need if we bought it a year ago and it's just sitting in the garage for the tenant? I mean, for the buyers. Because
Just the
they were,
receipt of it, but at that point, it is considered a gift and you can only claim $25.
but if we label it, put a plaque on it in the back, that will be considered a gift, right? Because it's a $500 gift. How does that work?
You're kind of like at that line right there. If you put your branding on it,
Yes.
You could consider that marketing material.
Okay.
So you could claim that as a marketing material. It would not be considered a gift at that point.
Okay, good. Where would we find a place where they would, get the plaques for you,
Oh, yeah, Michael's.
at Michael's? Okay.
Yeah, Michael's or you can go to like any, a trophy store or something like that. I think they have little
Okay.
places like that in the mall.
What if you buy a refrigerator? Is that okay too? I mean, can we put a plaque on the back of it or something? I don't know.
That's a conversation maybe to have with your accountant at that point.
Okay.
I don't know exactly how they would handle that. If you want to, start branding everything, you could definitely claim it as a marketing expense, but yeah.
Okay. Yeah.
Okay.
Okay.
Does that
Sounds
make,
good.
all
Yeah,
right.
that helps a lot. Thank you.
Okay, you're welcome. All right, everyone, let's go ahead and get started on the spreadsheet. So this spreadsheet here is called the P&L, which is your profit and loss statement. It tracks how much money you make and how much your expenses are. And then down here, it tells you what your worth is. That's your gross profit. And then down here at the bottom, after all your expenses, you've got your business losses and your net income, whether or not you're making money. The way that Keller Williams are, every market center, this spreadsheet is very similar to how the market centers keep track of their profit and loss. It's very detailed. There is a lot of information. You will find that you're not going to use all of it, which is totally fine. I think you can hide some of the tabs so you're not looking at it all of the time. It does give you different categories. Bigger teams are going to use a lot more because they're paying salaries to administrative assistants. They're doing different things. There's going to be more usage out of the spreadsheet than an individual that's doing real estate part-time. So on this one, it is a summary of everything that you're going to enter in on all of these down here. All of these tabs down here is kind of a summary of what we've discussed already. Tab 1 is your income. Your income here, it's going to be that you're going to keep track. First of all, it tells you up here what your split, the cap of our market center. If you're in Santa Clara, your cap is going to be different and you can manipulate this information. Royalty is always going to be $3,000. That is the way it is. And you can put your reset date. So say my cap resets every month in March. It'll recalculate how much your split is with the office at that point. Keeping track of or knowing this information is imperative. If you do not know this information, give me a call or give Stacy a call. Matter of fact, just shoot us an email. That's way easier. Give us a call or email us and reach out to us and we can help you if you don't know that information. Here's where it keeps track of your referral. This is kind of like a snapshot. It keeps track of what you have entered down here, and you can look at up here where you are on your income side. So entering your address. Now, I am going to put this challenge out to you guys to make it easier. I don't know how many calls I get when it comes around April 15th or October 15th for the extensions on the taxes. It never fails to get calls. I need a copy of my 1099. I need a copy of all of the expenses that I've paid. Send me this, send me that. It happens every single year and it's multiple agents because nobody is keeping track of their own information. It is hard to go through and try and find everything last minute for you guys because of all of the other stuff that I have to do. So please just make sure that you're keeping good records. Your commission demands will help you fill in this information. So for those of you that have closed transactions already, the month of January. You're going to put the address, the months that you've closed. We're going to say January since we're still in January. Whether it was a listing sales, there's different categories. You have lease and referrals. You have residential and commercial, and then the total price of the home. This will figure for you on, it looks like 3%. Where is that getting 3%? Sorry, guys. I guess you can manipulate this up here to be what we normally do is 2.5. Why is that off? Okay, so I'm not sure. I guess you can manipulate it. Some of you do get 3%. Some of you get 2.5%, 2%, 2.25. You're able to change that and it's just up here where you adjust that. It tells you what your split is with the office, how much company dollar is remaining for you to pay on your cap. Sorry, it's very sensitive. How much royalty you're going to be paying, and then how much is remaining. So as you enter in your sales that you've done, it'll keep a running tab of what is still owing to the Market Center and to International. And then up here in the top, it gives you an idea of what your total is so far in the year. So it gives you a breakdown up here. Is there any questions in regards to the income tab?
Can you go over does it matter the day that the house closed?
It's when you actually received it. So not the date. So you're just going to keep track of it by month. So if it closes in January, you know, between the 1st and 31st or February 1st to the 28th, it's not asking, it's just asking for the month, because back here on this one, it keeps track of it by month. That way you can see how you're doing every single month. Any other questions in regards to this tab?
Leslie,
The type.
Oh.
I'm sorry, go ahead. I'm so sorry.
Leslie, what is considered a royalty?
Royalty is what is paid to Keller Williams International. Every agent pays 6% on their first $50,000 of commission, which is a total of $3,000, to Keller Williams International for being a Keller Williams agent.
Thank you.
You're welcome. Nancy?
The type, just to be clear, the referral is for like a new home developer, correct? The referral versus the listing and the sales and all that good stuff.
Yes. So a referral, that's a very good question, because a lot of new home builders are basically giving referrals for when you bring in your clients. So yes, you could put it in there as a referral. You could put it in as a buy side or the sales side. It just depends on how you want to keep track of it. Referrals are also where you have a friend that's moving to North Carolina, and you look up an agent in North Carolina and you give them a referral. So they pay you 25% or however you negotiate it with them for representing your friend.
Awesome.
Quick question, Leslie. I just want to make sure I understand. For the month closed, is that when it actually closed or when you receive your income?
It just however you want to keep track of it. Again, this is yours. If you're thinking 2020, right?
Mhm.
If it closed in December, but you didn't get your check until January 5th, you don't have to claim it in December because you actually didn't get your money until January 5th.
Okay.
Okay. So it's when you get that actual check in your hand, that's what it considers for taxes. Now, you may get it reported on your 1099 if the office, say I processed it December 31st. And so it might show up on your 1099, but you can go to your accountant and say, I didn't actually get it until January. So he can actually adjust it.
Perfect. Thank you.
You're welcome. Any other questions in regards to the income tab? Okay, we're going to go.
It's beautiful.
Oh, I did not create this, so I'm not taking any credit for it, guys. Okay, wait, I want to go back over here to the income tab. I missed something. So if you go over here, miscellaneous income, this is where you can put, this is not the right tab. There's a place in here, I have to find it. I was looking at it earlier, so maybe I'm just, Oh, okay. Sorry. This is where you can keep how much GCI. So this is just a running tab. So you can put in what your total gross commission earned in this area. Actually, I don't even know what this is for. So ignore me. There is another place I want to touch on, but that's not it. Okay, moving on to cost of sales.
Really quick on the income, since you did just bring up miscellaneous, and sometimes an agent will help out another agent, you know, for a fee. Where would that go? Is that in another tab or?
Yes.
Is that okay?
Yes, there is another place because there's a place right here, other income and expenses where you can actually keep track of your profit share.
Excellent.
So, okay, so moving on to cost of sales. So for profit, for the property address 123 Main Street, we paid for staging. Okay. And that was in January. And it was for the listing side. And it was for, oh no, I'm sorry. Sorry guys, I'm jumping the gun. This is for any commissions paid out. So this, we are going to do a buyer credit. And this is on the sales side. And we gave them a credit of 1,500. Okay. This is also where you could put in referrals, where you paid out a referral. Referral to, we'll say Redfin, since that tends to happen. That was in January. That was on the listing side. And the total on that, we're going to say was $3,000. So this is part of your commissions. So it has nothing to do with it's out of your side of things. So it has nothing to do with the office's money, with the office's split. This is just out of your side. So if we go back over here to look at the profit and loss statement, it's down here in that area. See, it just entered that right there, the $3,000 and then the $1,500.
Leslie, this has nothing to do with taking it off the top or off the bottom at this point, correct?
Correct. If it was off of the top, you would not be able to claim that.
Okay.
So it is figuring in here what you've paid to royalty and to the office. That is just to give you an idea. That is also not going to be included in the 1099. You can give it to your accountant so your accountant can actually see. But just for note, just so you understand, in California, that would not be reported as part of your income. It does allow you to see what you are paying and it will keep a running total for you for the year.
I have a question. Oh.
Yes. Who has a question?
Yeah, I have a question for you.
Go ahead, Maxine.
Okay, thank you. On your 1099s, when you give it to us, it has our gross commission. Now, let's say that we paid for some of their closing costs and we had that deducted. Is that part of our income and we have to deduct it ourselves, or we just get a 1099 that's already exclude that?
Okay.
As a
So
credit?
when I do your 1099s, you'll get a 1099. If your credit to your client was considered to be off of the top, it will not be included in your commission.
It will not be included in the 1099, correct?
Exactly.
Because you basically, let's say the title company gives us a check, okay? Now, sometimes it comes from this title company, sometimes it comes from KW. Is that
Yep.
correct? From our office?
Yes.
Okay. I didn't know the difference between the two. So when it comes from, why would it come from our company versus our title company? Because like referral fees and things like that. And tell us what is already deducted when we get the our paycheck, if we have this kind of situation.
Any split to the office is already deducted. So if they write a check to us, it's because you guys are seeing that a lot of new home builders, they're only they don't want to waste the time of worrying about who gets what. So they just write one check. And then I go through and figure whether, what the split is with the office. And then, so you'll get a check for that. Now, if you have TC fees deducted or the $70 risk fee, that comes out of your commission. So that when you get, That'll be part of the business deductions and expenses that I will be giving you also a printout of so that you can use that. So that's kind of like when I send you it. When you look at your commission demands, there's the 3 lines most of the time, or 4 lines if you have a TC. The first line is going to be the split to Keller Williams. The second line is your check. Third will be the risk fee of $70, which is tax deductible. That is a business expense. And then the TC fee. So on that commission demand that you receive, the portion that is paid to us, is not going to be included in your 1099. Everything else from there will be.
Okay.
If you do a credit or a concession for your buyer, it is considered at the way we're doing it now. Because a lot of you, I don't think have ever been shown the example that I gave you. The way that we're doing that comes off of the top. So it's not included in either one of ours commission because it's being deducted and things are figured differently. If you tell me I want it deducted from the bottom, then that will, and when I give you the printout of what you've paid on all of your commission demands, that will show up.
Okay. So are you saying in theory that when you give us a check, it
Mhm.
will be minus all the deductions like risk fee and TC fee, everything, okay? And then the gross commission will include these, and then though that statement, we can deduct everything off of the gross, correct? Does that sound right to you?
That is correct.
Okay, now what if we get a check like a referral fee directly from the title company from an out of state? How does that apply? And you know that you have to deduct 20, our office split, whatever that may be. So how does that apply? I'm just curious about the referral fee,
It's
versus,
the exact same thing. It's the
okay,
exact same thing. I just don't take the $70 out of it. And you don't have a TC fee. So normally when you get a referral, like say you get that check from North Carolina, I'll just take out the split and then you get the difference. And that'll be included in your 1099. If it's for, if it's for a new home or there will be a risk fee deducted for that because we do have to review the file.
okay, all right. So every month I know now you charge us $130, for technology fee or something like that. Okay.
The business fees.
Okay, so let's say we write you a check or we charge it to our credit card. We save those invoices, right? For if in
Yes.
case it gets audited. Is that, we take it on the side, right? It's not part of the, we deduct, you're not gonna include that in your 1099. Well, let's say that we do want it deducted. Let's say we want 4 months worth every quarter, to deduct the total. Does that, when you give us a 1099, is that included or not in that? And then you deduct the office. Is that going to be a part of your statement that we can deduct?
Yes. Yes.
Okay.
So you're going to get 3 things from me. You're going to get a 1099. You're going to get a printout from our system that's called Winmore, where we create the commission demands. And that's going to show you all of the expenses for the risk fees and so on and so forth. And then you'll get another one that comes from our other accounting system that will have a list of all of the business fees that you've paid. So you should be receiving 3 things from me before the 31st. Okay. Yes, I only have a couple more days to get it all done.
Okay. And then we take that list, the business list expense, and we deduct it off the 1099. Is that correct?
Yes.
Okay, got it. On top of whatever we paid for gifts and stuff. Okay.
Yes. Okay, Stacy, you're sending emails at the same time. So if you have a comment, please jump in.
Oh no, Bill, you're doing a great job.
Okay.
Fantastic.
Thanks. All right, everyone, just so you know, we are recording this. So I saw a question in regards to getting a copy of it. It would be posted on our intranet as well.
Leslie,
Yes.
one quick question. I understand that the TC is already included and everything.
How about if we want to give the TC a bonus because she's been doing a great job? Would that be part of the business expenses?
Yes.
Okay, thank you.
Yes. So moving on, so cost of sales. So anything that you're deducting out of your commission goes here. So if it's giving a credit, whether it's referrals, you're going to put it all here on the commissions paid out. That is not going to be a business expense. Any questions in regards to this tab? Okay, so salary. Yes, I heard somebody say something. No? George? Okay,
Hello?
yes.
Sorry, Leslie. You're doing a good job. Thank you for explaining because all of us need the same answer.
Yes.
In terms of the this template, do we just go online on the KW command, or how do we find this template that you're talking about?
If you go to the chat, Jackie gave a copy of it so you can download an Excel spreadsheet. The Google Doc, if you don't have Excel, the Google Doc, we're gonna have to just give you, you'll have to make a copy of it. And then you can save it in your Google Drive.
Okay, save it on. Okay, so we can edit this, right? Edit this
Yes.
Excel sheet is what you're
Yes.
saying. And
Yes, you can create your own copy and keep your own copy.
okay, would you recommend Excel then for the downloading this or Google Drive?
Either one is fine. They're pretty much the same.
Okay, thank you.
Yeah, you're welcome. Sorry, there's another question. Okay, so we're gonna move on right now, David, to TC fees. So salaries and lead generation. So the company name, you're gonna enter in here, when you paid it, and then the type. So for salaries, you have management and administration, you got benefits, payroll processing, payroll taxes, and other benefits. So that's if you have any assistants that are helping you. Some states, they pay their buyer's agents differently. That's going to be in this area here under salaries and benefits. Under lead generation. Okay, sorry guys, I don't like the way that does that. You have different types. You have advertising, lead gen, internet lead gen, entertainment, and other lead gen. Someone had actually asked me about getting referrals from someone who is not a real estate agent. That is going to be other lead generation. So using that person the same way you would Boomtown or Facebook leads. It's all going to be in this area. So they're considering that a salary to pay. Sorry, guys. Give me one sec. Sorry. She's my 9-month-old puppy and doesn't listen yet. Okay, so lead generations, go here under lead generation, and then over here would be any salaries that you pay. Any questions in regards to that?
Can you give an example, Leslie? I'm sorry.
Of a salary?
Yes.
So let's use like a mega agent, Debbie Giordano. Everybody knows her, right? She has a whole team that works for her. So Debbie pays, I'm pretty sure, an assistant. She pays someone to manage her office. She could also be paying her buyer's agent a salary instead of a split of the commission. So that would be considered a salary. Over here under the lead generation, if you are paying, there was like I said, the question of someone who is going to be doing their lead genning for them. Say you've got somebody who's picking up the phone and direct dialing for you. That would be somebody you would pay under lead generation. Does that answer that question?
Yes, got it. Thank you.
Okay, you're welcome. Okay, so the next tab, occupancy and technology. So here under occupancy, this would be under your rent desk fees. So if you rent an office space in the office, you would put that there. If you are figuring part of your home, that 200 square foot, you would put that information in here. So say your mortgage is $2,000, 200 square feet of that would be 10%. You could claim $200 a month for your rent desk. You could also use the exact same equation for your utilities in your home. That would be PG&E or Comcast for your Wi-Fi. If you are only specifically for your Wi-Fi is only for your office, then you can claim the whole thing. Any questions in regards to the occupancy portion? Over here under communication, you've got your telephone service, here's your internet. So under here, website maintenance, this is where you would put all of that. Your cell phone, if your cell phone is your main connection, you can claim your cell phone bill. Your home serve, if you have a home phone, you can claim the portion of it based on your square footage, if it's used for your business. Any questions in regards to this portion? Here's where you would do your education, your dues expenses, your anything you pay for SCORE or NAR or MLS. All of that stuff would go here under this area, and under automobile would be the same thing. Under automobile, it gives you the mileage as the way to figure it, the interest portion of your monthly payment, and also a percentage of the lease. It's going to be based on this. Again, will be based on whether or not your car is used for personal use versus business use. You have to keep track of your mileage so you can take, say you drive 10,000 miles a year, but only 5,000 of it for business expenses, or business is 5,000 miles. You can only claim half of your lease payments, the depreciation on your vehicle, gas, maintenance, and so on. Any questions in regards to that? Okay. Yeah.
So if we have two cars, right? One of them is like the over 6,000, like the SUV. So can we technically use both of them though? Like, and then we just say we use 50% on one car and then the 50% the other car, and then charge the expenses on both?
So that is a question for your CPA. I do not know the regular, or I do not know that portion of the law. But if you are using two vehicles, I do not see any reason why you could not use or claim both based on the percentage of the mileage.
Right. If we don't keep the mileage,
I'm sorry?
If I don't keep the mileage log.
Yes, that's very bad.
Okay,
You can't really prove what you use the car for if you don't keep that mileage log. When we're done with this, I would go ahead and suggest you going either into the Apple Store or Google App Store to see and search out mileage trackers. It makes it real easy. It makes it real easy.
Okay, thank you.
Okay. Any questions in regards to the education auto tab? Equipment and furnishings. If your home office, if you purchase a desk, lamp, calculator, you can put all of that in here. Or if you rent anything. Property taxes on equipment and furnishings, most of you don't do that. That's called your unsecured property taxes. Any repair and maintenance that you have to do to your home office. All of that would be in here. And then office supplies, paper, pens, anything that you buy, printer ink, anything that you buy, staples even, paper clips. And over here is where you would do your insurances. So you have your automobile, errors and emissions, property, utility, and other insurances. I would check with your CPA on whether or not you could claim your life insurance payments. Because sometimes your life insurance, because of the fact that you bring in income, it's a possibility you may be able to claim that on your taxes, but check with your CPA. Any professional services, let's see what the categories are over here. Accounting and tax preparation, any legal fees, and any other professional services. Housekeeper or cleaning people that you have, actually no. That would go under the cost of sales. So if you have someone go in and clean the listing, like a professional housekeeper, that would go under your the same category as staging. Any questions? Over here, the next one here is your other operating expenses. This is where you would put charitable contributions, any loan payments that you can claim. Say you took out a loan for the purchase of a car. No, that's not a good example. The purchase of furniture for your office. I'm not sure. There's other things, I guess. Any fees or taxes. I know that on your federal taxes, you can claim the state taxes that you've paid. So keep track of that. That's that. Okay. Where was the other income? So here's other income and expenses. This is where you would keep track of any interest income that for your business, your profit share income. If you receive, like say sometimes you list a property with a title company and say they give you the title, not a title company, that's a bad example. Home warranty company. You list it and they're like your vendor that you're having there with you. They say, pay us $200 to pay for the food that we're going to be getting. You can put that in here and then claim the expenses. So you could basically call that as like an income that you've received from your vendor. For us in the market center, this would be like an MSA agreement. That's why I think they have this in here. You probably won't ever use it. Where they rent office space from us. That's considered a vendor supply income. But profit share income, this is what Hilda is constantly talking about, trying to get you guys to get people into your downline. I don't know if you heard yesterday at the meeting, there's a couple of people who get over $1 million a year. And I've heard of stories where they do lead generation for their real estate business, and then they do lead generation for profit share business. It's one of those things to definitely think about referring someone to the company. And it can be anywhere in the nation, actually anywhere in the world now where you can get that. Any other expenses? You got employee profit share if you have any pre-tax expenses. And then state and sales, more expenses here. I'm going to go back to here. So here you can enter if you want to set up a budget. Not exactly sure. I actually didn't really look into this tab, guys. Sorry. Give me one sec. Okay, so this is where you want to put your goals. So say my goal No, it's not letting me edit. I guess not. Maybe this is a tab that you can go ahead and hide. Yeah, it's not letting me edit that one. Sorry, guys. Okay, and then here's just, this is your profit and loss. So this is what your profit and loss would look like if you were to print it out and give it to, say, your accountant, or if you're looking to get a loan, sometimes the banks will ask you for your profit and loss. So this is where you would just print that page, and that's a total of everything that you've entered. So are there any questions in regards to this spreadsheet? Because this is something, and I challenge you all to spend time either going through it or making sure that you keep track of your expenses and your income. That way you're able to look at your business as a business. Over the years that I've been in real estate, too many times my agents are living paycheck to paycheck and they have no idea what they're actually worth. In this scenario, this person in the month of January received $12,000 in commission, and they literally only have $3,800 left after everything's paid. And I don't know if some of you have even thought in that manner, that you look at your business as a business. You are business owners. Every single person that's on this call right now is a business owner.
Scary, scary, scary.
Leslie,
Yes.
I am able to edit the goals tab on my downloaded version of this.
Okay.
Would you mind just talking a little bit about it so I know what I'm
Sure.
looking at?
Sure. Okay, so I am on the Google Drive one, so maybe that's why. I don't know. So goals. If you're able to put in your goals, like say you want to close 2 a month, that's 24 a year. You want to put down in here, so how many contracts you want to do, leads captured. That's the conversion rate. Goal setting. So your gross commission. Yeah, you know what? I'm not actually sure.
It looks like to me that this would be, you would basically take the information from your economic model and plug it in here.
Okay. Yeah, how many people on this call have actually read the MREA?
I have.
Good. It answers a lot of questions, right?
Yes.
Everyone on this call, and actually all of our agents, should read the MREA. The MREA is a Millionaire Real Estate Bible, basically. It is a real estate agent's Bible to learn how to run your business like a business. Yes, we are here to support you here at Keller Williams, but we're also teaching you how to be independent and learn how to just, when you change the mindset of just being a real estate agent and you become a business owner, it now opens up a different understanding of who you actually and what you actually do, who you are and what you do. And that's my goal, is to help you guys see that. Yes, Keller Williams is an awesome real estate company to work for, but it's also one that educates you guys to be able to do your business how you want to do your business and learn to run it that way. Every single real estate agent, we're trying to teach you how to run your business the way each market center does it. And that's what this is. This is to help you guys with. Is there any questions now in regards to what we've discussed, or any questions in regards to anything else I haven't covered?
Leslie, for TC deduction, do we need the TC's tax ID?
I'm sorry, Alice, I didn't hear you, kind of broke up a little bit.
For the TC deduction,
Mhm.
do I need to ask for the TC tax ID, EIN?
Okay, that's a great question. When we pay referrals, yes, we need to have their W-9 is what it's called, the form that they fill out, which provides us with their tax ID number. If you pay a TC, I am not sending your TC any 1099s. So whoever's using a TC on their transaction, whether it's Ann or Mabel or any other company, that is supposed to be reported by you. That is something to where you have to provide them with a 1099 for their income. That is not going to come from me. So you would need to keep track of their information. The
Okay, so we need
referrals,
to,
I keep track of.
okay, so we give the TC 1099, that's right?
Yes.
So we give the TC, okay.
You do
What
not
is
have
the-
to, you do not have to issue a 1099 if the income is less than $600.
For year? For
So
transaction?
say most TCs pay, you pay $400 for their, that means that they would have to do at least what, 640? At least 50, you would do, how many transactions is that? 10 is $400. So you would have to do over 10 transactions to pay a TC over $600. But that'll come on the statement. So the statement that I'm going to give you, the printout with all of the information as to what was deducted, all of your TC fees will be included in that. So you can go ahead and just add it up. You do not need to report or provide a 1099 to anyone where you've paid them less than $600.
Per transaction, below 600 per transaction?
Yes. So say you paid someone $570 for the year, you do not have to provide them with a 1099.
Right. But usually if we, like we have 5 transactions, then that means we pay that TC $2,000 a year, which means we have to have that 1099, right?
Yes.
Okay. What if your TC refuse to give me the EID, the tax ID?
I'm sorry, what was that?
What if the TC doesn't want to give me the tax ID?
You give them a W-9 to fill out.
Okay. Okay.
And then, yeah, it's either going to be a tax ID number or their social security number.
Okay, got it.
Okay. Any other questions?
Leslie, is there, if we enter something in incorrectly, will it be flagged? Or it's just something that our accountant will have to pick up on? Or is there any, like, any tabs with notes in there explaining what, you know, this category chance?
No, you kind of just go by whatever here is in the type and kind of get an idea of what it is. If you enter something incorrectly, it's still going to be an expense, whether or not it's going to be on the right tab or not. Like say you put in here salaries and benefits, you put a staging company, it's not going to matter because that amount is still, it's helping you to see when you go back to this page here, it's helping you to see where you're spending a lot of your money. That's what this whole thing is for. It's to give you an idea of what you're making versus what you're spending. And if you see that down here under advertising, like say I'm only getting maybe 2 or 3 leads from Zillow, but I'm getting a whole bunch from Facebook, and you're paying different amounts, it's to give you an idea of how much money you're spending versus how much money you're actually making. Does that make sense?
Okay, perfect. Yep, absolutely.
Okay, so if you put something under benefits that actually is an advertising, yeah, your accountant will probably pick up on that, but it's okay because it's still going to be considered a deduction. But you want to kind of put everything in the right category so that you can look at it. Like if I'm spending $2,000 on advertising in, 1 month, but I'm only bringing in 8,700, that's 1/4 of my income. That's pretty much like 1/4 of my income being spent on advertising. I might want to rethink how much money I'm spending and go more towards look, maybe Facebook is cheaper than paying Zillow, or get to the old fashioned picking up the phone and calling or door knocking, because that's $2,000 I could be saving and putting back in my pocket if I go out and door knock, until I get to a point where I'm making more money and I can afford that $2,000 a month. Does that make sense?
Yes.
So this is definitely to help you just look at it and see what you're paying for. And, you know, even for telephone services, if you don't really know, like my phone bill from just me and my son is like almost $200 a month. That's crazy. I can go to a cheaper service, but it gives you an idea percentage wise versus how much your income is, and helps you to see where you can trim fat, or where you can even add some stuff. If you're not spending that much, maybe you can afford to do a dialer where somebody makes the phone calls for you, or you can afford a virtual assistant to help you do some of your marketing. It helps you to see where you are financially, instead of just getting a check, putting it in your bank, and then paying your bills. And then at the end of the month, you're like, wow, I only have $100 left. What did I spend it on? This gives you an idea.
Hello, Leslie. This is Grace. I have a question. I'm using Quicken, but they don't have those subcategory number like a 61120. Is there a way we can use Quicken to create all those subcategory for each one to create something? Do you know that?
Quicken, yes, I believe that you can go in and you can create different general ledgers. You don't have to use these numbers that are here in the spreadsheet. You can just use the description if you want. But I do believe you can add and take away different general ledger categories. I think that in Quicken and QuickBooks, they have tutorials that can help you with that. But this is one of those things where if you're using this spreadsheet, you wouldn't have to pay a monthly subscription to use Quicken or QuickBooks. But if you're comfortable using that, I'm not saying anything against it. Did that answer your question?
Yes, yes.
Okay, great.
Mine is not that expensive, like $30 or $35 a month. I have Quicken. It's sync with my bank.
Yes, and that's always a good thing. It makes things easier. Okay, any other questions? If not, then I'm going to go ahead and conclude.
This was wonderful. Leslie, can we do it like once a month?
I don't know if I have the bandwidth or the time to actually do it once a month, but we did record it. I will maybe try and do it once a quarter. And then that way, after the first quarter of you guys keeping track of everything, maybe we can touch base and kind of go and see how things are going. And you guys feel free to reach out to me anytime. I will definitely try and help you as best I can.
Fantastic. Thank you so much.
Oh, you're so very welcome. I hope that this helps you guys. I hope that you guys, it doesn't make things too confusing, and it helps you see your business as a business.
Hey, Leslie, how can we get that form? It was not in the chat.
If it's not in the chat, it will be on, I think it was in the beginning. I think I saw the links to it.
I sent it. I sent it about.
Is.
Yeah, I sent it a few times. There should be. If you just scroll up, you should be able to see it.
If not, we can see if we can email it out. It'll be in the intranet. I know that for sure. Jackie and I already talked about that. So all three of these things, the link to the right, Jackie, the link to the 11 deductions for every real estate agent, and then the publication. for the
Yeah, there will be
IRS?
3 materials. Okay, so there's going to be 2 links and 1 Excel sheet. I will have that up in the intranet on the file share tab on top. It's the orange tab. You can check it there, but if you scroll up in the chat right now, I'll just go ahead and include it again. You should be able to see the template. It should be uploading right now. If you're on your phone, I don't know if you'll be able to see it because it is a file. So if you're on your laptop, most likely you should be able to see it.
Yeah, I'm on my
So
phone. I
the
don't see.
links I can definitely get you guys.
Can you email it to us?
Yes, I will email upon request. So if you need it, please send me an email and I will definitely get that to you. Okay.
All right, thank you.
No problem.
All right. Any other questions? Everybody good? Everybody got a head start for 2021?
You're so awesome. Thank you.
You're welcome. You guys have a wonderful rest of your day and shoot me an email if you have any questions. Okay,
Thank you, Leslie. Wonderful information.
you're welcome. Have a great day, guys.
You too. Bye-bye.
Thank you.